Good evening, everybody. All right. We've got the great pleasure of having Wendy Kirkland back with us. And it's a great pleasure because Wendy has developed some trading strategies that definitely put the probabilities in your favor. She, in 2009, co-authored Option Trading in Your Spare Time, A Guide to Financial Independence for Women. And in 2010, was discovered when the online traders heard of her P3 system and produced 100% winning trades. So with that, we're all anxious to see what information she has for us tonight. Wendy, welcome back to the Candlestick Forum. We're anxious to see what you got.
Thank you very much, Steve. I appreciate you inviting me. You are always such a gracious host. I'm just really pleased to be here to share information with your group. Hopefully it's information they'll be able to utilize right away, and we'll get started. For those of you who do not know me, I've been a full-time trader for 11, almost 12 years. I administer several advisories, and I've written a number of strategy books. And the one I'm going to talk to you tonight about is the price surge system, which trades both long and short and is a swing trading strategy that utilizes primarily 60-minute charts. And so it works in a volatile market like we've had recently. Many people come to the stock market by different means. Maybe you have somebody in the family that's involved, or it could be your education or your job. And many of us come by financial needs. And that was my situation, that back in 2004, when I first, or before I got involved in options, my husband and I owned and operated a gift shop, and it was flooded out, and it just totally wiped out all of our sweat equity, our inventory. And here I was, 55 years old, and we needed a new income. And a friend introduced me to options, and from that point on, I have been involved. I ended up developing some strategies because I approached the market differently than many people. I'm an artist, and I see things different. I didn't come from a financial background. And so you're going to see some things tonight that are a little different, and it's because of my art background that these things jumped out at me. My primary goal was to get out of the situation that we were in of being broke and very close to losing our home and everything that we had put into the shop for 20 years or more. And eventually, once I became successful in trading, I thought, this is something that I can share, and I can help other people achieve the same thing, whether they do it full-time or part-time. And so I started writing strategy books. I do newsletters and the advisory and some coaching. The elements that I have found that have led to this success, one is option trading. Now, some of you may do Forex or the futures or just buy stocks outright. For me, the leverage is options. I buy weekly or front month, and I have developed some patterns that help me really spot when an equity is ready for an explosive move. And so we're going to take this tonight kind of step by step. It's lots of information to cover, and I'm going to go rather fast. Normally, we have kind of a trading funnel, and we have the equities that you would select. You come up with a pattern, and then you choose your expiration and hope that all the elements work out together, and it comes out the bottom of the funnel. Well, we're going to turn the funnel upside down tonight, and so let's discuss the first key, which is option trading in general. So for those of you who have not been involved in options, we'll cover some information here so that you can see the leverage behind options. So we're going to discuss a trade on Celgene, and we'll say on September 29th, the stock price was $106.38. And by October 5th, it rose to be $117.90. Now that's a hefty 11% gain of $11.52. On September 29th, the October monthly expiration for the 106 strike call premium cost $4.15 per share, or contracts of options are 100, so that would be $415. On October 5th, the bid premium when you want to sell that option was $11.30 per share, or $1,130. This is a 172% gain in those 4 days. Now that is what the leverage of option is. The price rose 11%, and yet in those same 4 days, the option rose 172%. So had you, this is a real hypothetical, but had you invested the $10,638 that it would have taken to purchase 100 shares of stock, and it earned $1,152, or the investment that we had for $415 for that same 100 shares of stock that earned $715, you could have, for that same $10,000 investment, you could have bought 28 option contracts and earned $20,000 in those same days. Now, like I said, most people are not going to take $10,000 and invest it, but this is a great example of the leverage that you have in options. It's like you're trading with a down payment, and you are in control of an equity for a period of time. And so if you can zero in on when the move is going to take place, whether it's up or down, you are able to benefit from this high leverage. So here's Celgene stock, and I'm going to show you how you can anticipate a move. This is the entry of the trade that we were just discussing, and this is the exit is marked up toward the top. So what told you that this was going to move? There was several other moves. If you grab the pencil here, there was a drop in the past, and then it started up, and then there was another drop and another little signal here and another drop. So what would have told you that this was the main move that you needed to get in on? And this is what we're going to discuss, and I'm going to show you tonight. If we proceed here, the second element was why weekly options. That there's monthly, there's leap. So what's the big deal about the weekly options? And I'm going to go through a number of advantages that weeklies supply, and there's 2-3 slides here. And so it's a lot of information. I'm going to go really, really fast. And then I know this is going to be recorded and sent to you so that you can then look at it at your leisure. That weekly options are relatively new. They're on their 4th or 5th birthday at this point of real popularity. They've been around a little bit longer than that, but they really have come into vogue in just the last few years. And most traders are really afraid of them, that they don't understand them because there is this time decay that happens, and they're worried that we've been taught that you need time to allow your patterns to play out. Well, weeklies kind of work in reverse of that you want to get the direction right and take advantage of the fact that you don't have all of the money tied up in the time. So this is a list of some of the advantages. One is that they're cost effective. They're a fraction of the cost of monthly options. They allow for flexibility that you can trade them in calls, puts, spreads, covered trades, whatever type of vehicle that you're interested in. Long-term trades are subject to market changes, and with short-term trades, you trade what the market hands out, and you are prepared to trade either way depending on what's happening during that day. And since weeklies are new every week, a trader can pick to choose to enter the trade at the moment that the action is actually happening. There's no need to tie up capital waiting for the equity to go through a pullback or a consolidation period. There's 52 expiration periods a year. Weeklies are available on the indexes, on stocks, on ETFs. The exchanges offer new weeklies on companies that are going to cause attention and are kind of in the hotline each week. And usually these have high volume. 1 week a month on the third week of the month. All optionable equities are weeklies. Weeklies are a short-term chartist dream because all you have to ask yourself is where will this equity be in a week or less. The shorter time frame allows for more accuracy that you can trade weeklies in conjunction with news events and earnings reports. Weeklies remain more reasonably priced even during periods of high volatility, which is not the case with monthlies. And once the news is released, weeklies suffer less of a volatility crush than monthly options do. And a few more advantages. Weeklies inherently offer a greater delta. Weeklies don't suffer the high theta. Time value is less of an issue. Cheaper prices mean you can purchase more contracts for the same total investment. Gamma is explosive with so little time value. And quick price moves before the market can change direction compounds the benefit and the leverage of option trading. And recently, it's been about a year and a half, the exchanges have been given permission to offer weeklies out for 5 weeks. But you don't want to go too far out because you might just as well buy a monthly. So when you combine the elements, one is the options and utilizing weekly options, and then the patterns that I'm going to cover here in just a few minutes, and the details for the strategy. This is how I was able to double my money in most cases in 4 days or less. And there are some losers, and you have to be prepared to put stops in place, and it works out that the winners outpace the losers when you pay attention to your stops and get out when a trade moves against you. And truthfully, I hear from traders every single day where trading these patterns is changing their financial situation and they're becoming financially independent, or maybe they couldn't fund a retirement account and now they are able to, or to send their kid to college, or whatever their financial need is. I consider myself to be an everyday trader. I'm not managing big hedge funds accounts or anything like that. I'm an everyday mom and pop kind of retail trader. And most of my trades I suggest just $600 per trade. And that's trading just a modest, say, $5,000 to $10,000 account and using good risk management. That by applying these strategies, it only takes a 2.5, say, to 4% equity move, often for a weekly option to double. And that is one of the keys, and that is one of the things I'm going to show you here in the price surge system and how to be able to do this. So let's look at a specific trade and work with the charts here. Let's purchase mid-trading day on September 30th, Home Depot options for $1.55 per share or $155 per contract for the October 15 monthly. So that's about 2 weeks out for the 115 strike call. And let's say we bought 4 contracts for a total of $620. So that's in that range that I'm talking about. And you sell at the end of the day on October 13th, 3 days before option expiration. The call contracts were worth $6.15 or $6,150 for a total gain of $5,530. That's 892%. So Home Depot stock when you entered the trade was approximately $112.50, and when you sold, it was $121.50. So that's a big jump. That's $9 in price. That's a hefty 8% gain in the stock's price over those 10 days. And yet the option increased 892%. So for those 10 days, you controlled $45,000 worth of stock. That was 400 shares at $112 for the investment of $612. So if you can zero in and figure out what the price is going to do, and you have a pattern that shows you that this is going to have an explosive move, you're able to get in with what would be like a deposit to control a number of shares of stock, have the move happen, and then get out. You are receiving the benefit and the leverage of that price move, and that is what can change financial situations for people. So let's start with Home Depot's chart here. This is what it looked like on September 30th. And again, you look at this and it went through a consolidation period. It went up, it dropped, it went through a consolidation period again. It went up, it dropped again. So what's going to tell you that this is getting ready to move? And we're going to add some indicators here, and I'm going to show you. That the first indicator we're going to add is the PPO, Percentage Price Oscillator. And if you all are not familiar with this, it's quite like the MACD, the MACD, that price moves in the direction of the cross. So here we have the PPO crossing down, and price is going to move down. And we can see here that it moved down. Here it kind of flattened out, it went up and down, and that's exactly what happened. It swung back and forth. Again, we had a little period where it crossed up and we had price go up, and then we had it cross down and price dropped. So the PPO or MACD swings up and down, up and down. It's an oscillator that kind of goes from extreme overbought positions down to oversold. So what is going to tell you that this particular trade is really ready for an explosive move? The next indicator that we add is the ADX, Average Directional Index. And this is where my art, being an artist, comes in. This has nothing to do with financials. It has to do with, I discovered that when you place the PPO on top of the ADX and the lines come close together, I call this a squeeze, that this is signaling that price is going to go up. Here we have the squeeze, and what happens is the lines press away from each other and price goes up. And we're going to look at some other ones. I can sit and see one here that I didn't mark or pay attention, but the lines came in close together. That's the squeeze. When the lines spread apart like this, price goes up. So we'll continue looking at it. Another chart of this is the same squeeze pattern, and it continued up, and continued further for another few days. I think this trade we said was 10 days. And so this is, again, the same pattern, and things continued up, and until it finally started rolling over. The PPO rolled over, and that's when we would have exited. So let's look at some more. Here is a squeeze that got started, and this particular one got going, but then it didn't go any farther. We had a PPO cross down. Here's a nice tight squeeze. The lines spread apart from each other, and this is a big run up. Here's another squeeze. I've already circled it, but the lines have come in very close together, spread apart, and it moves up. This is Starbucks. This is Goldman Sachs. Squeeze, the lines spread. So I have no doubt already, if you set this up on your chart, you're going to be able to spot these same moves. You know, it doesn't take a lot to be able to get it. My books that I write, I write just like I talk. Like you and I are across the kitchen table from each other having a conversation, and I'm saying, see this line crossing that line? So here's a squeeze that's just getting started. I wanted to be able to show you one that so that you would recognize, not after it happened, but as it's taking place. So here you have this squeeze that's taking place. The lines are coming very close together, and that's what it looks like. So then you have the lines turn up and start spreading apart from each other, and you have this move that continues up. So the results here for Visa, again, I remind you that a 2.5% to 4% equity move equates often to a double in the weekly premium. So you just have to get the direction right, and this pattern really, really focuses on that. So here you purchase calls mid-morning after the open for $1.23 per share, or $123 for the contract for option week 2. Expires on the second Friday of October. 69 strike call. And let's say you bought 5 contracts for a total of $615. Again, that's in that 600 price range, just for average account. When you sell on October 9th on expiration day, the call contracts are worth $4.70, or $2,300.50 total, for a gain of $1,735. That's 282% in those days that the contract was open. That Visa's price when you entered the trade was $68.50, and when you sold it, it was $74. So that's a $5.50 gain. That's about 8%. So that's double what I was saying was a double in the weekly premium, and the trade was open 10 days, and it increased 282% over that same period. So again, this really shows the leverage of option trading, but not just option trading, weekly option trading, where you get the direction right and are able to capitalize on it. So I want to point out that the pattern works on every type of equity. This is IWM, so this is the index for the Russell. And you have a squeeze, you have the lines pushing away from each other, and you have this explosive move to the upside. Here's a 15-minute chart, and this is for Monsanto. Again, you have the lines coming in like this together. They're squeezing together, and then they start spreading back apart again, and you have this upside move. Here's a 5-minute chart for you who are day traders. The lines come in together, and then they spread apart, and you have this pop, and you're able to get in quickly and out quickly and capitalize on the pattern. Here's another one. When you see the lines coming together, you want to wait for confirmation signals, and time is too short here for me to be able to cover everything within the strategy, but you are getting a real gist of what's taking place. The lines will start spreading apart, and this is your clue to be able to get in. Look at another example here. I want to point out that not every squeeze is the same. Here you have a really nice tight one, and this one got started, the lines pressing away, but it really only went sideways. Another one, I call this a re-squeeze, that it re-squeezed again without going through all the stages and created another squeeze, and it kind of went flat. And again, this went flat. You need the confirmation signals so that you don't get in and have your money tied up in a trade like this before it's getting ready to actually have the explosive moves. Here's a couple others, and I'm sure at this point you've got the gist. So when you have the confirmation signals, and some of them are candlesticks, which you all know, it gives you the signal that, okay, this is the squeeze now that is going to have the explosive move to the upside. So the idea with my reverse funnel, as you call it, is the fact that you're applying, we've been talking about the P3 squeeze pattern. There's also short, the P3.5 pattern. And the gist is that you want to be very particular on the expirations you're getting into, the equities that you're getting into, and then the patterns. And when you do that, then you have the profits kind of exploding out of the wide end of the funnel. And again, this is the normal. You have your equities expiration pattern, and it comes down because you've narrowed just kind of into one aspect of it, and we are focusing on doing the weekly and front month expirations, stocks with large moves, and then incorporating the P3 and P3.5 patterns so that it comes out the wide end of the funnel here. So we've talked about the P3 squeeze, and that is the long pattern. And so we're going to check out the P3.5 squeeze, which is the short pattern. And we had talked earlier, I explained how the PPO goes in, trades in the direction of the cross. So it's logical, if you're looking for a trade to go down, you're going to follow it across to the downside. And this explosive move sideways like this between the ADX and the PPO tells you that this is going to be a huge move down to the downside. So let's see. Here's another one. You have the PPO cross down, cross over its signal line and head down. And then you have the, lines spread apart from each other, and it signals this explosive down move. So now you have a long pattern, and you have a short pattern, and you are able to ride the waves up and down. You are able to follow and get into the trades when they're getting anything to move up, and also then when it's moving to the downside. The P3 system is a book that is about 145 pages that covers lots and lots of examples of the pattern and explains all of the details. And then sometimes it's easier to learn when somebody's talking rather than reading. So it comes with a DVD that also explains the long and the short patterns. There are stages to every single squeeze. And these stages, you have a beginning entry pattern, and then you have a period where you could actually have a second entry. The pattern signals what a stop would be. There's a period where you can kind of sit back and relax and say, okay, as long as the lines are proceeding in this way, that I can relax, and only when it starts to roll over, then is it time to exit. It totally goes over every single detail as far as the alerts and confirmation and the stages for not only the P3 long, but also the P3 and a half, as well as all of the short pattern. We call that a squeeze too, but it's not quite as obvious as the P3 short. And I just glanced down at the chat here. I'm sure there has been questions as I've been going through this, and I haven't really paid any attention to the questions. Steve is going to help me with that in just a minute. But I'm seeing the question that someone is asking about recent charts, and these patterns are not anything unusual. It's not that I did some of these slides a little while ago and then incorporated some newer ones and so on. They happen every single day. That it is not something that only comes along once in a year. They happen on a regular basis, and of course it depends. If you're looking for them to happen on a weekly chart where you're getting into leaps, they're not happening as often as they happen on a 60-minute chart or a 30-minute chart, but they are definitely something that happens on a weekly basis. Again, I'm seeing some questions. I'm getting caught up in this. You can apply candle patterns to this so that all of the things that Steve has taught you about long or short candle patterns are all kind of incorporated within this. You can use MACD instead of the PPO. If you research, I saw earlier a mention of Thinkorswim, that if you research on Thinkorswim, you'll find somebody that has set up a PPO oscillator. I like PPO better than MACD because it's done with percentages. The formula is a little different, but they work exactly the same and are almost identical. Let's see. Someone's asking the best chart frame to use, and it really depends on the individual. That some people cannot watch charts all day long, and so they maybe would apply the pattern to a daily chart. Other people like to be in a trade for 3-4 days, and so maybe the 60-minute chart works well for them. Other people, I really like the 30-minute, and you can be in a trade then from a few hours to maybe 1 or 2 days. No, this is not part of the Metastock add-on. That is kind of a different strategy and a different program that gives alerts. All right. So again, the idea is the fact that you can ride a trade up and know exactly then when to get in to ride it down and when it's ready to go up again, and to be able to catch the significant moves that are going to give you the biggest bang for your buck. I'm seeing a question down there about for daily charts, I would use something longer than 2-week option. That using weeklies really pertains to maybe using 60-minute and 30-minute on down from there. That if you're going to trade with the dailies, I would probably buy 2 months out, hold the trade for the better part of 30 days, and sell maybe 30 days before expiration. That's Roger, I'm seeing your question there about how do you find the stocks that have the narrow squeezes and so on. And I actually have come up with lists of charts that I kind of shift and scan through them and move them from one list to another. I do a number of email or newsletters, and my son helps me, and we shuffle, and so that we are moving trades, equities to a list that looks like they're getting ready for the P3.5. Once they finish the P3.5, then we're shuffling them to a list where they're forming new P3 squeezes. There is not really a super good scan because the PPO and the ADX are individual to each stock, and it's a visual pattern that you can do a scan for a MACD or PPO cross up, and you're going to get 10,000 of those crosses. You really need to have the ones that are creating the pattern, and that is tough to scan for. Again, that I know that PPO is on toss. It looks like somebody found it, and I appreciate that. I knew that it was on there. There's so many traders that use Thinkorswim, and I've had a number of them mention. So in addition to the price surge system program, you get the book, you get the, it lays out all of the details about both patterns, showing the alerts, the confirmations, the stops, second entries if you miss getting in on initial, the exits. And then I do a weekly newsletter that is a part of this that lists stocks that are creating the P3 and P3.5 patterns. And this is what I was talking about my son Patrick and I work on, where we shuffle the stocks and are watching them until they're kind of at the prime area and getting ready to have the move and set up. And so that way you are set to be able to trade whatever the market is handing out, that you're ready to jump in when the trade really is brewing, whether it's up or down. You're able to capitalize on those. And so it's a really full, complete system where it takes a great deal of the work out from you. You're not having to scan through thousands of charts to come up with the dozen or two that are creating a pattern at the moment. That part is done for you. There's information here that you can email me at wendykirkland.net, support phone number. And for those of you who are attending tonight, there is a special offer relating to the price surge system. And again, that includes the book, the DVD, and the newsletter for 3 months. This is a little different than the PEP strategy. The PEP strategy is actually a chat room where we discuss patterns, and it is trades little stages of the P3 and the P3.5. It's not the whole pattern. It's just very, very quick geared toward people who are interested in day trading. It's quick in and out. Thank you, Becky. I hope that maybe you would post the link for me. Weeklies are not mainly for day traders. That you can get in weeklies and buy, say, 2 weeks out, and the current week then is your trade week, and you can think of the second week then as being your escalating time decay week. So by buying 2 weeks out and trading within the current week, you have a little bit of insurance there that you don't have the escalating time decay, and you're giving yourself a full 5 days or 4 days or whatever for your trade to play out. And when you're trading 60 and 30-minute charts, which is kind of what this is geared toward, it's going to happen within that period of time. There is a track record. You could get it through the support people. They could send you a Excel file or whatever. You can get that number again tomorrow when you look at the recording of this. I usually buy at the money strike. Yes. Sometimes, depending on what the delta is, I will go to the first one in the money, but often it's at the money. Okay, Steve, we're probably just about out of time. Did you see any questions or anything that I missed from earlier on that we haven't talked about?
No, I'm sorry, Wendy. I should have announced
That's all right.
we'd take questions at the end. So I'm kind of sitting here just lollygagging. So
all right.
Does it work for the ETFs?
Yes, it does. Truthfully, this pattern will work for any equity. It'll work for Forex. It'll work for futures. It'll work on anything that is chartable. So that's why I was saying I was hoping that you all would be able to incorporate the information right away into your current strategies, because you'll be able to start spotting these. I'm seeing a question about any recent winners, and there's a number of charts that come to mind. AIG was one recently in the last couple of days. LinkedIn was one in the last couple of days. There was so many. I don't have my notebook where I've taken notes, but I probably have been in maybe 20 trades this week, at least. And you say, how many trades a month? It really depends on how many you want to enter. That, like I said, the trades, it's not that they come about, that they're rare, that I try to focus on stocks that I know are going to have big moves, and I show you how to do that within the book. But they just happen on a regular basis, no matter what time frame you're in. I'm seeing someone again ask about daily charts, and patterns on daily charts don't happen quite as regularly as 30 and 60 minutes, but a great example on a daily chart, and I know this one off the top of my head, that if you go to DIA, the diamonds, or if you go to SPY on a daily chart, you are going to see the squeeze there and see what's happened over the last period of time. You can go look at it at any point. The ones that I was mentioning, like AIG and LinkedIn and gosh, Google and Apple, all of them have done it recently. You could throw a dart and get in them. Have been on 30 and 60-minute charts. So, like I said, it's not an uncommon thing. You just want to zero in on the squeeze patterns that are going to be successful by having the confirmations, and you want to zero in on stocks that are going to have big moves. I'm seeing a question about stress-free wealth building. Stress-free wealth building is a strategy that does use daily charts. It is more for the very beginning trader to options. If somebody really doesn't have a clue about option trading, stress-free wealth building is a great place to start. And it goes over maybe half a dozen different strategies. Some of them are candlestick related, some of them are EMA related. It also focuses on the IBD, Investors Business Daily Top 50 stocks, and works with them as far as patterns. And so stress-free wealth building is just a great place for someone new to options that wants to really get their feet wet, have it explained very openly and give them a really broad view to the market and options and a place to start. And then you could branch off from there and maybe go into price surge system or so on. Okay. James, thank you for checking that out. You're right, Netflix and Amazon both were really good trades. Like I said, it's a long end of a long day, and I'm like, have brain freeze here a little bit. But when you enter 30 minutes for one day, at what time of the day? I usually will not enter a trade until after amateur hour, meaning at least the second candle if I'm trading a 30-minute chart. There often is a morning trade and can then be an afternoon trade. Sometimes I get in the afternoon trade and hold it into the next day. And I think Steve did say that there was going to be a replay, and I don't know when it'll go out, but I'm sure you'll be able to do it, and you'll be able to review the information at your leisure and either write for more details and check out the offer. Again, Big Al, I appreciate the comment there. Like I said, my approach to the market is a little bit different. So many of the teachers, focus on fundamentals and earnings and so on. And I kind of approach from a different direction. And I see patterns, I see pictures, and that is what I teach other people to see. And then they're able to incorporate that into their trading. If they have other things that are favorites of theirs, they're able to apply this without it really interfering, and they can make a whole little package out of it. This is not exactly the same as the Bollinger Bands. That it is different. That it just signals kind of the exact time of the explosive move. I've looked at the Bollinger Bands, and they can be great. They can do, but this is a little bit different. Well, you definitely get different when you get me. That I've called a lot of things a feisty old lady. I saw something not too long ago about with the pep thing that I was the Smoky Mountain grandma, and it's true. I am a grandma, but I am just a little bit different. Well, any other questions, Steve, that you saw? I don't want to.
I can't see any. I can't see any. And again, the reason we have Wendy come on is she has an extremely unique and very fine, detailed trading strategy. So as she mentioned, you can't set up scans for what she's doing. It's all visual, and then she makes that visual analysis available to everybody. So again, if you're a trader that is looking for another technique, and the reason we have somebody like Wendy on is because her trading strategy has one basic function to it. It essentially sets up parameters that are going to put the probabilities of being in the right trade at the right time extremely in your favor. So that's why if you've got a tendency to like to day trade, I always mention when you see somebody that has a good trading technique, you're going to get much more than your money's worth from what she provides for everybody. All right, I guess with that, Wendy, thank you very much. Very good information.
Well, I appreciate it. Again, you are a gracious host, and your group is always very attentive and appreciative, and there's nothing better that I like than sharing and helping traders understand what I do. So I appreciate you all.
Yep, everybody take a look at her information. I think you'll be very impressed with the quality and the probabilities being put in your favor. So with that, Wendy, thank you very much. Very good information. And thank you, everybody, for coming tonight. We'll hopefully see you all in the chat rooms.
Bye now. Take care.
Thanks, Wendy.